Hey, what's going on, guys? This is Blood Phantom here, bringing you another stock market video. This video is going to be more of a tips and tricks type video. So if you're into that, then go ahead and drop a like so I know to make more tips and tricks videos. Let's see if we can get to 6 likes either way. I think that's a very doable goal. So I'd really appreciate it if you guys could drop a like. All right, so moving on to the video. So this video is going to be like pretty simple advice. This is maybe stuff that we've heard over and over again. But it's often the advice that's the most simple, which is easiest to forget, yes, but it's often the most simple advice, which is usually the most powerful. If I can give you guys an example, so let's say an NBA player has just won MVP, which is one of the highest honors they can win as an NBA player. So they won this award. Let's say it's Russell Westbrook. He won it a couple years ago. So they say, Russ, do you have some advice that you want to give to the kids of America to become great like you? Now, what Russell Westbrook is going to say is most of the time very, very simple advice. What he's going to say is, if you have a dream, then go after it. You work hard at it every day, you put in the time and the effort, and you practice every single day, and your dream can become a reality. Now, this is not advice that's like world changing or game changing, although it is basically advice, but it's not mind blowing. And that's because a lot of times it's very hard to do and it's very hard to be consistent at it. That's the key. What separates someone that's amazing at something and someone that's pretty good at something is that the person that's amazing puts in that extra hour every single day and they're consistent at it. Because over the course of a career, just like the stock market, that extra hour will compound and it'll pay you dividends. Just like the stock market. So, moving on to the video, my advice is going to be very simple, and it's this. Instead of passively investing every single month, there is a next level you can take it. And what this is investing on red days, taking advantage of market volatility. It's simple, but people don't execute it, maybe due to fear or maybe due to lack of strategy, lack of preparation. But I'm going to give some tips on the best ways to be prepared for when the stock market is volatile. So let's say you have 3 people. Person A is a saver. They save $500 into their savings account every single month. And that's better than a lot of people in America, to be honest. A lot of people in America can't afford an emergency of $1,000 or something like that. Something that's pretty scary like that, to be honest. Not a very good sign. But yeah, so this person is a little bit better than that. They save money every single month, which is great. I'm not shaming anyone that does that. I think that's fantastic. But there's obviously a better way to make money. Over the course of a lifetime, there's person B who invests their money every single month. They invest their $500 every single month instead of just saving it. Now, you'll be hard pressed to find people that don't agree that person B will accumulate more wealth than person A, even if there's a recession, right? Even if there's multiple recessions, it's undoubtedly person B is going to have the most wealth. And that's where a lot of people are. They're person B, which is awesome. That's probably at the minimum what you should be doing. But is there a next step you can take it? Absolutely. So this is person C. Person C is the shark. They get in when there's blood in the water, and they take advantage of those cheap shares. Now, a lot of times when there's market volatility, for example, what's been happening recently, and I'm a shark. Let me just say that the market has been super bloody lately, but I've been making a killing because I have money that I'm ready to invest when there's blood in the water. So, like I said, this person C, will see these opportunities and they'll be prepared for it. If I can go back to person A for a second. So let's say there's person B, which is the passive investor. And so they say that on the 23rd of every single month, I'm going to invest my $500, right? Which is great. But what happens on January 23rd? Stock market is near its high. And so they invest that money and then the stock market plummets. And they don't have any more money to invest to take advantage. Maybe they might even get really scared and just they clench their fists and they're just worried. They just really want the bad times to go away because their portfolio is down. And it's pretty scary to be down. Obviously, it's scary to be down. No one likes being down. I hate it, but whatever. It is what it is. They don't take advantage of anything. So the next month comes around and they say like, you know what? I'm gonna get my paycheck next month, and I'm gonna invest more money in this time of market volatility. So February 23rd comes around. What happens? We're at another peak once again, and then soon after the market plummets, and they have no more money to invest. Take advantage of those cheap shares. Now, there's a couple strategies for being the shark. I'll go over a couple of them. There's no actual, there's no real way to take advantage of cheap shares. Just this is all specific to each person, in my opinion. But I'll give some techniques on how to do that. So, one way to do that is instead of investing your 500 every single month, what you do is you invest 250 or 300 every single month, but you keep a savings account for when the stock market plummets or has these cheap shares. So with this, you have a rule that you tell yourself. You say, I will never spend money off of this emergency fund unless it is a red day in the stock market, which is fantastic. So like, let's say during this time of market volatility, and this is a daily chart, so each of these candles represent a day. So every time it's a red day, you invest 15% of that savings account into the stock market. So red day here, you invest some money. Green day here, you don't invest. Red day here, you invest some money. It could be anywhere from 10 to 15% of your overall account, right? But over the course of this market downturn, right, if you're investing your money on red days, by the time the market gets to where it once was, you'll have averaged down to a lot of shares down here, and your account is going to look so much better if you had just invested on green days. But let's take that a step further, because one or two red days out of the week is a lot different than a huge market downturn, which is something like this. And then it also happened again in 2015. Summer of 2015, early 2016. So let's say you have within that emergency fund, you have a smaller portion of it, which you say, I am not going to touch this money unless the stock market goes down 10% or 15%, something like that. So let's go ahead and look at this price range. So market here at its peak is that, and then at its bottom, at its worst, it's 13%. And this is the summer of 2015, by the way. So only then do you dip into that emergency fund and you start buying those cheap shares, right? Now, most stocks that you would have bought at this time period, if you had followed the system, by the time the market gets to where it once was, instead of panicking, instead of selling, you're over here buying those cheap shares. When the market recovers, your portfolio is going to look amazing. And it hurts to be down. It hurts to take the heat. But this is what rich people do. And this is what I'm encouraging you guys to do. Like I said, there's no perfect way to do it. I just gave a couple examples of the type of strategies you can do. Like I said, one thing is I have my own personal rule. I try to only invest on red days. Maybe that's your rule too. Maybe it's not. It doesn't work for you guys. But figure out something you can do to take advantage of volatility. And so that's what separates passive investors from those that are really, really good at investing. Cool. So that's it for this video. I hope you guys learned a lot. It was definitely fun making this video. Go ahead and subscribe if this is more content that you want to see. Like always, I hope you have a great day.